Welcome, everyone. This is Mariusz Konieczny. I have a special guest with me. We're going to talk about copper, and I reached out to this individual after I heard him do an interview, and his famous words were,
I'm very bullish on copper this year. Copper, by the way, is my top pick for 2025.
welcome, Lobo Tigre.
Well, I'm happy to be with you on the show.
Let's talk copper. I understand you recently made a pivot into copper. So why?
So the thesis here is not buy copper today, it's going to the moon tomorrow. And I want to make that very clear because there are people who are telling me, hey, Lobo, great call for copper for 2025. It's already up 13% or whatever it is. But the reasons why copper is up right now, particularly the latest moves, are tariff related. And that's not my thesis at all. Of the various tariffs that Trump might have imposed, putting one on copper, which the US produces very little of, that was not one that was high on my list of probabilities. So this is not the call I made. Don't congratulate me. I'm not right at all yet. So the idea is simply with all the chaos and turmoil, which we knew was coming. We knew Trump shock was coming. We knew Trump 1.0 was already, threw the rule book out, and Trump 2.0 showed every signs of being more. And if the other side had won, if Biden-Harris had won, then we would have had inflation no matter what. And the Trump agenda, for all the shock and turmoil, was also inflationary. So we didn't know what would happen one way or the other, except that inflation, one way or the other, was baked in the cake, it seemed to me. And that was good for all commodities writ large. But the reason for copper specifically is that other commodities are not facing the same structural supply constraints that copper is. And some other ones that I like a lot, like gold and silver, for example, or uranium, at the time, they weren't as cheap as copper was. Copper was, of the four that I liked the most this year, gold, silver, copper, and uranium, copper was the relative bargain at the time. So I just saw more alpha in it. It was easier to see copper going from 4 to 5 than to see gold going from almost 3,000 to 4,000, say, for example. A similar move would be a much bigger ask from gold than it would be of copper. Uranium has now corrected a lot, and it makes me more interested in uranium again. But at the time, it was 70, 80 bucks, or 75 bucks maybe still at the time. So it wasn't particularly cheap. And silver was trading above 12-year highs. So copper seemed to me to be the one that had basically very little downside and the most potential for the metal itself to do very well this year, and then for the stocks to add leverage to that. So that was the logic. This hasn't played out yet. I think it will. Nothing has changed. Everything we see from the Trump agenda so far, besides the shock and awe aspect of it, it's still inflationary. The pay-fors, if ever, are way down the road. The current budget proposals are, even more money helicopters in the air, as far as I can tell. And unless you believe that Doge is going to find $2 trillion to save right away, I think that outlook is there. But so it's inflation, therefore commodities, therefore copper. Why not the others? Because lithium is being flooded in the market, for example. Nickel, also the Indonesians and others are producing it like there's no tomorrow. Cobalt's got a little bit of a tailwind right now because of a moratorium from the DRC, but that's temporary. And how long can they put that on? Of the various choices that I had, and even oil, by the way, I'm very bullish on oil farther ahead, but we still have voluntary supply constraint from OPEC plus. And if we have a weakening, stagflationary environment, that's not terribly bullish for oil either. So all my choices, really, copper was the one where the stars aligned the best.
You said copper is supply restraint. What do you mean by that?
In the very near term, most of the models, not just ours, but if you look at the big engineering firms, the Wood Mackenzie's of the world and so on, the near term, the supply and demand is fairly balanced. And it looks like in some models, some people even have surplus this year. But these models always assume that everything will go as planned, and nothing ever goes as planned in mining. Right? They assume that the new ramp-ups and the new production will be there as scheduled. That almost never happens. And then there's the subtractions. Like nobody saw Cobre Panama coming before it happened, or before the kettle started to boil over there. And there's always something like that. There's, road blockages in Peru or something, takes supply offline that's in these models. So if we're looking at most of the heavy hitters in the space looking at a close balance, and then just the reality of mining being what it is, I think that's imbalance. I'll be surprised if by the end of this year we don't start seeing reports of copper supply constraint even this year. And then going forward, almost everybody agrees with me that the gap widens, right? The demand keeps going. There's a headwind here potential in that because everybody got so excited about the electric cars and how much more copper they use, and now more recently artificial intelligence and the electrification and how much more copper that's going to demand, there's this perception that, oh, the whole copper story, it's all about AI or it's all about EVs. And that's not true. I mean, long before Elon Musk even had a gleam of electric cars in his eyes, right? Copper was called Dr. Copper for a reason. It's an essential industrial mineral. Simple population growth, which is still happening globally, that alone requires more copper usage going forward. And then just industrialization writ large, electrification, even without electric cars, just, the billion people on the planet who don't have regular access to electricity, more of those people wanting what you and I are sharing right now, that means that demand for copper is baked in the cake regardless. And then on top of that, if you've got extra demand from electric cars or AI or whatever, that's great. If you look at these models, you'll see most of the ones that have enough detail to be useful will show you a base case which excludes the EVs or AI. It's just growth population, industrialization, projected GDP growth for the world. And okay, you can take those figures with a grain of salt. But all of those show a widening gap going forward for decades. And that's before you add on the electric cars and the AI or any other, flavor of the day. So the reason why I'm bringing this up and focusing on this is that, the EV story has come apart recently. There's been, a drop off in adoption. People who hate electric cars are celebrating. Ooh, nobody likes the EVs anymore. I think that celebration is premature. But even if it's true, that doesn't make the base case increase of demand while supply remains constrained. That doesn't take away from that. And similarly with the AIs, this DeepSeek from China has everybody saying, oh, the AI thing's overdone. We're not going to need any more energy. No, that's not true. Even if there's a new technology that's much more energy efficient, it's a new technology on top of everything else. And even if it's more efficient, it's going to demand more electricity. So I think there's this risk of I think unreasonable negativity facing copper from people saying, oh, you see the electric cars are going away. Oh, you see the AI thing is overblown. But that was never the reason, the base case for copper in the first place. This may not seem like a concern with copper up with, Trump talking about, studying copper tariffs and things like that. But I think that it's a mistake to rely on the tariff thing, because if there's anybody sensible around Trump, they have to be telling him, sir, he likes to be called sir, we just don't have enough copper. If you tariff this copper, yes, we will produce more 5 or 10 years from now, but it's not going to help us during your term in office. And at some point, it seems like somebody ought to talk sense into him. And so I think it is a mistake to count on copper tariffs. And even if they do happen, okay, that increases the price in the United States. What does that do to the rest of the world? We've got right now massive movements of copper into the United States as this arbitrage, and people are trying to front run these tariffs, pull copper demand forward, as it were, into the United States. So what happens once the tariffs are in place? That stops. So the tailwind we've seen from the tariffs at the beginning of this year goes away. And then on top of that, you could have the pile on of people saying, see, there's no more electric cars, or see, the AI thing was all hype. And so my concern is, or maybe not concern, my hope is that we'll see a bit of a turnaround and a correction in the near term, because I still have a shopping list I haven't been able to execute on, because copper moved up for reasons I wasn't expecting before it expected, and I haven't been able to buy in yet. So for whatever it's worth, I think there is I won't just say non-zero, and I won't even just say non-trivial. I think there's a very significant chance of a substantial copper correction in the near term this year and in the quarter ahead, say, depending on how Trump's tariffs work out. And it may well be that the tailwind that we've seen at the beginning of this year goes away completely. and it could be a substantial buying opportunity ahead. And if not, sorry to go on so long, but here's the bow on the end of the present here. If not, let's say I'm wrong about all of this, copper's bottoms in at 470, it's just going off to the races from here. If that's true, the case I just outlined, as I say, it's a multi-decade bull case. So if I miss the bottom, so what? I'll still have years and years and years to profit from this trade going forward. I expect to be long copper for a long time going ahead. And so I'm just not worried about trying to time the bottom. I am concerned as a newsletter writer, right? I am concerned about telling everybody, oh yeah, copper's a sure thing for decades. Just buy, don't worry about the bottom. And then it falls off a cliff tomorrow and all the shares are on sale 50% off next week. People won't forgive me for that. So I'd rather wait for that danger to be past. If it happens, I plan to buy it. I plan to deploy big time. I'm hoarding cash now, and my shopping list definitely includes copper plays that I want to buy if that happens. And if not, I'll buy anyway, because there'll be plenty of time to make money.
During the interview that you gave, Rick Rule was with you on the panel, and he said,
I'm a metaphor for the copper industry. I'm 71 years of age, fat, bald, past my prime, and that's what the copper mines look like around the world.
Yeah. And I was wondering if you can comment on what he meant by that.
Well, if you look at the, Brigham Canyon in Utah or El Teniente or these things, these assets that Codelco has in Chile, these mines are literally as old as Rick Rule or older. Now, he said it, so we're not beating him up here and calling him an old man. So he beat us to that. though this is clever marketing on his part, because he's also saying I have experience, right? And part of his shtick there is I'm old, overweight, okay, and rich. He says I'm a rich old man. So naturally, people want to say, well, how did you get that way? I want to be in your shoes when I'm your age. So don't think Rick is down on himself. It's actually, I think, very clever marketing. But what he's saying though is that there is, in the face of increasing demand going forward, an aging fleet of supply is a real concern. And, if these mines could just keep going forever and ever, that would be great, but they're not likely to. And the deeper you take a pit, the higher your strip ratio. At some point, you're forced to go underground if you're not going to just close the mine, and that costs more. And so you have to find a smaller, higher grade component within all that low grade stuff that you were mining open pit. And it doesn't always work. So there are hopes, there are expansion plans for these projects, but as with any mining project, no matter how well you study it and no matter how big the mining company, the biggest and the best mining companies in the world do a no expenses spared feasibility study on a new project or an expansion. They build it and then they find out whether it works or not. Right? Nobody knows. This is high risk even for the biggest and the best. And so with all these aging projects out there, what is the probability that they'll all be able to see life extensions? I would say the probability of all of them is basically zero. Some of them, okay, not bad. Most of them, I don't know. Where is the balance in there? But what Rick is saying is that there is supply and expected continuation supply that, who knows if it'll really be there. Meanwhile, the exploration and discovery isn't happening, not at the pace we need. Okay, Robert Friedland has this fantastic, new mine in the DRC. We all know it's the success story in the copper space of the last 20 years. But that's just it. Think of what I just said. It's the success story, right? There's others, but nowhere near on that scale. And according to these models, we need something like, what is it, 3 or 4 of these things every year, to keep up. And they're not happening. The exploration and the discovery is not happening at the pace, and the development is not happening at the pace. The permitting is certainly a major issue. The legal problems with this, if Trump really wants to see more production in the United States, tariffs are completely irrelevant. What he really needs to do is talk to the regulators and to the courts, so that when something like resolution ends up in front of the Supremes, that they don't shoot it down. 30 years to permit a mine in the United States. That's ridiculous. The the competition, a 25% price difference or something from Peru or Chile is nothing compared to the self-harm the United States is doing with its own regulatory and legal environment for mining.
You like copper. You hope it will correct because you want to go shopping. So how do you, what are you looking at? What do you like? How do you play it?
Okay, it's a fair question. I have a general strategy, which I guess to use Nassim Taleb's phrase, I have a bit of a barbell approach myself. I'm willing to speculate on juniors that might have a hockey stick in store, but I'll balance that on the other end with a major that's a no-brainer, right? It's let's say it's trading at a cyclical low. I'm not worried about this company going broke, or going away. So I think my capital is relatively safe. And if copper goes where I think it will, then that one's going to do fine. And that balances, my higher stake speculation on something more earlier stage. And then there's no one size fits all from there. Personally, I'm averse to very early stage grassroots exploration. Yes, I know that's where you get the 10 baggers at the beginning of the Lassonde curve, but nobody knows who's going to deliver that. Not even Rick Roll, Doug Casey, certainly not me. Nobody knows which explorer is going to make the next, Comoa type discovery. And if you're Rick Roll or Doug Casey, you can buy them all, right? you can get in on a private placement, and with a very low cost of capital, and you can buy them all. And then, it's easier to throw a big net and get lucky. But for the average retail person who can only handle a portfolio of a certain size and is unlikely to get invited in on the same terms, you have to be a better stock picker. So I guess, yes, that's an admission that I'm not yet at the level of Rick Rule. Big surprise there. So what do I do then if I'm not going to go grassroots? Oh, and by the way, I know that I do have readers and clients who are in favor of grassroots. So if I see something that's interesting in grassroots, I will tell them, this might be a yes for you, it's a no for me. It's too early stage for me, but it's interesting. So I recognize that. But what I look for is on the exploration phase, the thing to remember is that 10 bagger at the beginning of the Lassonde curve, that doesn't happen on the discovery hole. I mean, sometimes on a great discovery hole, the stock might double or something. But that 10 bagger potential, that's from the discovery to basically first resource. It's while you keep drilling and drilling, you keep making it bigger and bigger, and the people keep piling into the stock. So if you miss the beginning of that curve, but you get in, if you miss the discovery, but you get in still towards the beginning of that, there's easily a 5 bagger plus to be made by the time you get to the top of that first peak in the Lassonde curve. I call this success in progress. Rather than betting on success that hasn't happened yet, I'll wait to see something that shows clear signs of success and progress and jump on that bandwagon and enjoy whatever I can at that first part of the Lassonde curve. And okay, maybe I miss out on more 10 baggers that way. Maybe, no, I'm not going to say maybe. I definitely miss out on more 10 baggers that way. But I also have much, much less risk because I'm only betting when I already see that success and progress. Another part of the Lassonde curve that I use strategically is the pre-production sweet spot. It's hands down my favorite type of speculation because very few companies get to the point where they have all the permits, they've got all the money, the feasibility study is positive, shovels are hitting dirt, and they're building a mine. Once you check off all those boxes, the odds that you'll actually build that mine and succeed are very high, on the order of 95%. Like most people actually get there. What happens after you build a mine? I was just saying earlier in this interview that the biggest and the best don't really know what's going to happen, how the reality is going to conform with their feasibility study, right? Until you turn the thing on and start shoveling dirt through it, you don't know what a mine's going to produce. So what happens at the end of the Lassonde curve is always a big question mark. But that pre-production sweet spot is a highly reliable source of gains. The odds are much in your favor. And this is sort of my claim to fame in this space. As far as I know, I'm the first person to actually do math on this and collect data on this. And as shocking as it is, the average gain from a construction decision to first pour or first plate or first production, whatever, is on the order of a double. Not a 10 bagger, but the odds are so much more in your favor. A likely double, in my view, is something I always want to bet on as opposed to a possible, maybe potential 10 bagger.
I personally got involved in copper in 2017 after I read the book, the electrician book. You know what I'm talking about, right?
Yeah, Johnny's my
Yeah,
electrician drives a Porsche.
right, exactly. And I was wondering, because I used your piece in my video. Have you ever heard of a company, Oracle Resource Corp, with the Santa Thomas project, copper project?
I have, but I don't discuss individual stocks outside of the pale. That's what my clients pay me for. So I can say that the company is under coverage in my take, but I'll have to decline further comment after that. Sorry.
Okay, no problem. Yeah, so that's the only one that I own, but fair enough. Is there any final thoughts that you would like to share with my audience on copper demand, copper supply, anything that you could add value to my listeners?
I think we've covered most of it, but I guess I will double down on saying there's a very good chance that you're going to hear a lot of negativity about copper this year before my expected, happy days come later. If Trump puts a tariff on and that goes through, that may support copper for a while. But even if there is a tariff and it does stick, which I don't think is a given, but even if that happens, well, there's no more front running. There's no more people trying to rush copper into the United States before the tariff. So that trade unwinds. And then so the US stops buying copper or pays more for copper coming into the United States. That's going to make copper cheaper for other buyers in other countries. Never forget that commodities are globally fungible. Okay, it's much easier if it's gold, right? You can fly millions and millions of dollars in a small airplane. Copper is a bulk tonnage commodity, but it is, there's enough concentrated value that it will, like oil, find its way around the markets. And if you think that Trump tariffs in the United States are going to make copper prices stay higher globally, just remember what all the sanctions have done to stop oil from Iran or Russia, right? When you have globally fungible commodities, these things don't stop the flow. And if copper is the new oil in the new millennium here, I think that's a good metaphor. I don't think these tariffs are, they're causing disruptions in the market and that's impacting the price, but I don't think that's a durable basis for speculation. And if it unwinds in any way, we're likely to see a headwind. And then all this negativity I've warned about will come in and all the people piling on. I think that becomes an opportunity. And if I'm wrong, then as I say, I think we're going to have years to benefit. So I guess I'm just saying, if you hear all this negativity later this year, keep your eye on the fundamentals. Don't freak out. There's not a lot of things that I would just pound the table and say, buy the dip on. But copper is one of them. I mean, for example, uranium, if there's another Fukushima or another Chernobyl, that would be really bad for uranium. So there are dips there that I wouldn't want to buy. That can't happen with copper.